My internet. What internet are y'all hooked to? Because my internet keeps like
Dropping.
yes. Has it been doing that to y'all?
Yeah, I don't know if it's my computer or the internet, but we've all been having slow computer problems today.
It's the internet.
It's
Because
not saying that it's dropping.
well, watch. This will go circle of death on me here in a second. What's up, Andrew? What's up, Nicholas? Trying to do. No, it'll. I mean, it always works at the beginning. Leave mid sentence, turn around, and it'll be dead. I'd call him a bitch. Show y'all what's on my mind. I see way too many. I can't really get into the big picture stuff because I don't operate on the big picture. I operate in this little confined space with the people down here. So I just had a talk with the office staff about what this means. These are all theories. None of us have ever survived a recession in real estate. Although when you work in the oil field, you go through ups and downs all the time. So you kind of get, I don't know if you want to say whiplash or whatever, but when you work in the oil field, we went through a crash in 2015 that I never recovered from. The oil field in general hasn't recovered from it. We went from 2,000 rigs running in the United States to less than 1,000, and we are currently still less than 1,000. The last time I looked, which been over a year ago, but it's only gotten worse. When you go through that, you have to underwrite your life as if that's going to happen again. Now, a lot of people will say that's living in fear, but it's just not. There are certain things that you can do and certain things you can't do. Grant Cardone talks about this, talks about his loan getting called for $50 million on Carlos and them's podcast. He talks about all of these things all of the time. And it's just something in general that whenever I heard the words come out of his mouth, talking about the recession, talking about how there was more demand on his units, but his lending is what got harder, was something for me that has stuck with me when we started this journey. So for us, what it means for our business is going to be something completely different for y'all. And these are just some things that are on my mind. Now I'm coming to the video now so I can share it into the group. So anyways, I'm not real sure. This is just stuff that whenever it's already happening for us, like for instance, we just got $400,000 dropped in our lap because of the fear of this recession, because of the return on investment that this person was getting in their 401k, and because of all the talks and all the trade wars and all that, they just wanted to get their money out of the market, wanted to get it into a harder asset for a longer term. So we got 400,000 dropped in our lap for 3 years. So this was, kind of always my thoughts on what it would be. I always thought that this would be how it ends up. Hold on, I'm trying to. But again, we've never been through it. Recession talk, no. Recession. I need y'all to get this out to your people. I'm trying to get it done right now. So this is Anyways, I'm putting it out as many people as I can without getting blocked, and kind of talk about what's already starting to happen from our end of things. So, told y'all the other day, last time I was on in the group, told y'all about my buddy's aunt just dropped 400,000 in our lap. Recessions are tricky animals. You've got right now we have somebody on our team that pays $2,000 a month for rent. Just talking with him this morning, it's like he's already looking at it and wondering about it and this and that. And we get to having a conversation about it. And I'm like, hey, look, $2,000 a month rent, that's all of my monthly bills. I can't trim any more fat for my expenses other than probably eating out, which, we could go do without. But that $2,000 a month rent, we've got mobile homes that we're currently buying for $30,000 that you could move into and get down to $300 a month, quote unquote, rent. You know what I mean? So there's tons of trim, but I'm going to kind of show you what we're looking at. So we just had 400K dropped in our lap. 400K at 8% interest only. On a 3-year term. Okay. That's nuts. The reason why we had that phone call was because of the stock market, because of what the stock market was doing, because of what everybody was predicting, because of all the chatter, because of what you hear in the news, all of that. Somebody looked at it and said, hey, look, I want to ride this wave. I don't want to be on this. I'm 60 years old. This is my retirement. I want something safer. Do y'all have a place to put that? So we immediately took this 400K that was somebody's retirement that they moving into self-directed IRA. We started the refi process, and we're parking that private money on one of our mobile home parks. Now, I told y'all at the beginning of this, I cannot look at the grand scheme of things. I operate right here. So I don't know what's going to happen worldwide. But I can tell you, this mobile home park is 19 units. Okay. That rent from 600 to 800. Okay. It's in a town of 13,000 people. It's also the county seat. Okay. It's a mobile home park. Now, when you think about this, it's kind of, you go into that town, there's a lot of $1,500 a month rent. There's a lot of $2,000 a month rent. There's probably some range of $2,500 more rent. But how much $600 to $800 a month rent is there? There's not a lot of it. It's a college town. It's got 13,000 people. It's in the county seat. It's really hard for me to imagine that a county seat's going to go belly up. But it's right there, 19 units, $600 to $800 a month. You just take the bottom number right there. 19 times 600, $11,400 a month gross rents. This is a park that for us, we feel is pretty safe. We feel like, there's going to be some things that are going to happen, because out of the 19 people that live there, are we going to be naive enough to think that if a recession pops off, that some of these people aren't going to get laid off, that some of these people aren't going to have to move? So the way we're preparing for that is, you just figure that out of 19 units, if you lose 30% of that 19, nine. All right, so I swapped the internet over to my phone. I don't know if y'all will come back or not. Y'all can catch this later on the replay, if so. And I lost my eraser. Found it. Okay. So what I was saying is, we're figuring we're gonna have to turn at least 30% of our units. Okay. So you can't go into the recession being naive enough to believe that there isn't going to be issues. Just because you have rentals doesn't mean you're safe. Just because you have low budget rentals doesn't mean people aren't going to get laid off, not going to be able to afford it. You're not going to have to evict them. You're not going to have to start over with new tenants. Okay. This is $1,500 a unit. So we've got 300. With 30% is 90 times 1,500. It's $135,000. So if I'm going to budget for this recession right off the bat and figure that we're going to have to turn 30% of our units, and these could be units that, people have been living in for 10 years. They've been at the park. They've been your tenant since you've owned it. They were the previous owner's tenant. Doesn't matter. If you're going to prepare for it, you're going to have to underwrite the downside of it. So we're going to figure that we got to turn 30% of our units, and we're going to withhold 135K. 135K. I wrote 2Ks. Just to spend on CapEx, just to spend on turning those units, vacancy loss, make readies. It's probably going to be higher than 1,500, but it's probably going to be less than 30%. Okay. So you underwrite that, get your cash reserves. Now you're just going to write that off. Might as well just put it in a separate bank account and just let it sit there if you got it. If you don't have it, you better figure out how to get it. Now, as for the fix and flip people, I've been underwriting deals for a while now. People buy at the top of the market. They love the hot market. They love the fast. I'm seeing people. I talked with a hard money lender the other day. They're taking more properties back than they ever have. I talked, they're having investors having to refi and all that sort of stuff. And I just chalked that up to one simple thing: fix and flip people. This is what we kind of covered in the two botched videos is the rental side of things, weathering the storm on the rentals. So I'm figuring 30% turnover, $1,500 a unit, which might be low. Maybe we bump that to $2,000, and it's $180,000 that we need to put back for our 300. So you're going to turn 30% of your units. Going to have make ready's vacancy loss. The real hard part for us is that when that stuff happens, because it happened to us every month this summer, we lost 10%. Every single month we were evicting 30 people. We didn't have enough staff in the office to handle the evictions, to chase the rent, and to lease the units, much less the backside of it, which was me and DJ out trying to look at them, get bids on them, to get them made ready, actually physically go get them made ready, all that kind of stuff. We were completely overwhelmed and unprepared for it. So when that started, when that avalanche started, it was like, oh man, what do we do next? Where do we go? All that. Now we're a little bit more prepared for it because this was our first summer managing that many units. We're completely more prepared for it. But we're going to anticipate it again within the next. I've been reading anywhere from 12 to 36 months. I don't necessarily believe any of it. But I already underwrite it because we're from the oil field. Already underwrite it like we're going to go bankrupt tomorrow, anyways. So on the fix and flip side of things, this is where it gets kind of interesting, because one fear about the recession that I have that's big time is that bank money gets tight. Now, like I talked about at the beginning on the other video that some of y'all might not have caught, people are pulling their money out of the stock market. Okay, they're looking for a safe place. Our track record is what affords us that opportunity, because people know, they know that we're a safe place, a safe haven from the chaos of the stock market. So you got the stock market going up, down, round and round. You've made a lot of money over the last 2 years because it's gone up so much. You want to get that out, but you want to keep it in a tax-free environment. You don't have to pay taxes on it, so you don't cash it out and put it in your bank. Cash it out and put it into an IRA. We got everybody just rustling bags. But anyways, so you have that going on. It's going to create more money opportunity for you if you know how to manage rentals, if you know how to own rentals, if you know how to find rentals at a price point that can make sense. But right now, what I'm seeing, and this is from investor friends of mine that have got some major misses on their record. I'm seeing people have to take a $200K house, and they're having to rent it for $2,000 a month. Okay, and they're parked on hard money. It's literally they're just sitting there renting a $200,000 house for $2,000 a month because it wouldn't sell after they got done with the flip, and they needed to rent it out. I know several people that are holding bullshit like this in their portfolio right now. Now, that house, there's no way, I don't care how many different ways you try to manipulate that in their mind. I mean, if that's on 12% hard money, that just covers the debt service, and it doesn't cover the taxes or insurance, much less any repairs. So you're in a cash flow negative asset right now, because of the decisions you made a year ago to buy that. Shouldn't have made that decision to begin with. Why anybody's playing in this price range is because, maybe it makes sense to them, maybe it's good, but in a down economy, who can get a $200,000 property loan? How many people? How many people are going to be able to hang on to their job and get that loan? How many people are going to be able to qualify for that loan from an income perspective? Because even if you don't lose your job in a contraction, you're going to lose some money. So if it's me, I'm underwriting every single deal like I already underwrite every single deal at the 2% rent rule. Okay? 2% rent rule says if I've got $200K in a house, instead of $2,000 a month, I'm now renting it for $4,000 a month. Okay. If it won't do that, and that's an extreme example, but if it won't do that, I'm not buying it. So what are we buying? What's on our board right now? On the other side of this board, I flip it around and show you. I don't know that I can because it'd be upside down if I flipped it. This is the button though. We'll give it a whirl. Yeah, it's all upside down, but you can see everything we got on here. Everything we got on here. Well, this is the purchase price: 35,000, 60,000, 35,000. Two houses for 90, two houses for 75. Okay. Every single one of those is a 2% rental. Every single one. Okay. Not only is it a 2% rental, but it's a 40 to 60% deal. As is. No work needed, no rehab, not fixing shit. Okay. Now, my worst case scenario on every single deal that we buy is that we have to rent it out or own or finance it. In this market, what I fear from my side isn't that we can't rent these deals out, these 2% rentals at 40 to 50%, because I mean we're buying stuff for 35,000, so we got to rent it for $700 a month. It's in very affordable. If you rent a 3-2 for $700 a month, you might not want to live in that deal, in that property, you personally. But I guarantee you'll live there before you live under a bridge. Okay, so all these bushy ass people living in $2,000 a month rentals are having to go home and talk to their wives about moving in that $700 a month rental because they're not going to have a job. All these bushy ass investors in buying and flipping houses from $200,000 to $500,000 because they want to be cool, because they want to get laid, because they want to go talk about it on the Book of Faces. They're going to be in a bind if there is a contraction, if people do, if there is a recession, all that. Those houses aren't going to be affordable to anybody. If you're playing in the 100K or less game and below, you should be all right. Now, again, I wouldn't even buy a $100,000 house. Me personally, I wouldn't buy it because I can't rent it for $2,000 a month. It doesn't necessarily make it a bad deal because I really think in this contraction, if you have anything, and I've been thinking this for forever. I mean, $100,000 house, 1,500 square foot house that you're buying for 100K. Hold on, I'm having to ignore DJ's calls. A $1,500 house or $100,000 house that you bought for 1,500 square foot house that you bought for 100K. Oh, it's $66 a square foot. Okay, you can't build for $95 a square foot. I see a lot of people post a lot of stuff, but $66 a square foot, you're already doing pretty good. That's an affordable house. So if you're going to be in the wholesale business, if you're going to be in the hotel business, if you're going to be that way, if you're going to try to survive this recession, don't go take a flip that you're going to end up with 200K in and expect to move it. Now you might be looking at a $60,000, $70,000 margin, but even then you're at 140K, 130, 140K, and now you got to rent that thing out. You got to do it. What I worry about is that we're not going to be able to get lending. So I'm setting up my private money when we buy this. I'm going to have a conversation with them and be like, hey, look, here's what we're doing. If we can't get lending on this, we're going to have to restructure this deal. We're going to have to negotiate this. Like either one, you have to understand that this is going to be a longer term loan, or two, not do the loan. I don't know anybody with more money coming into the market, supply and demand, more money. Now we're paying 12% interest. If we've got a bunch of 8% interest money available to us because there's money leaving the stock market that doesn't have a safe place to go, then obviously it's going to drive the price of money down, which is going to create more opportunity for those of y'all that know how to manage properties, which we have a complete property management company just down the aisle from me. We're all down there managing the shit out of it. So from my side of things, fix flip, wholesalers, 100K and less, you'll never be able to go wrong. Markets might slow, they might soften, but I would not put any dimes, anybody's money at risk in something that I wasn't planning on renting out and leaving on private money for a long period of time, just in case banks tighten up lending. There's a run on the banks, people are pulling their money out and they're getting a little sketchy. The other thing that we worry about, or at least my own personal worries, is that if there is a run on the bank, they start calling commercial loans due. It happened to Grant Cardone. Granted, never missed a payment. It's happened to other people. That's my probably big fear. But you know, on the other side of that is, if there's more money available, private capital, having enough equity on that mobile home park, like the one we talked about at the beginning, to be able to move that money, pay it off, do whatever you need to do, not be over leveraged on what you have right now, is a great place to start. So, anyways, it's been a ramble. I'm hot. I'm just kind of sad that Emery is at school. I'm about to dive into some actual work. I just wanted to share my thoughts since everybody else on the internet was sharing their thoughts. I'll see you.